This is the FCTO Daily Forex News Report for the 15th of April 2013. Equity markets retreated Friday and the move has continued in Asia following weak data in both the US and China. Chinese GDP rose a weaker than expected 7.7% year-on-year in the first quarter of 2013, versus expectation of 8% year-on-year and down from 7.9% year-on-year in Q4 2012. Industrial production also disappointed, rising just 8.9% year-on-year in March, lower than the expectation of 10.1%. Fixed asset investment and retail sales came in a notch weaker than expected as well. The new releases show that the Chinese economy failed to gain further momentum in Q1 following the improvements late last year. US retail sales for March underpinned the expectation of the world's largest economy is heading for a soft patch as consumers scale back on purchases following the tax hike on the 1st of January. US bond yields fell steeply on Friday on the back of lower risk appetite and the outlook for a soft patch that is likely to push a tapering of US asset purchases more into the future. The oil prices also retreated a lot recently and fell further this morning to below $101 per barrel of Brent oil. This is the lowest level since July last year and will give support to consumers, underpinning our expectation that the US soft patch is likely to be short. In Europe, EU finance ministers on Friday agreed to extend the average maturity of loans to Portugal and Ireland by 7 years to facilitate a return to market for the two countries over the coming year. The aggressive policy response from the Bank of Japan remains a main market driver, and while the yen has weakened after the announcement, the response also triggered renewed demand for euro area bonds last week, and thus added support to the euro through the European government bond market. Hence, there is currently considerable focus on Japanese investor behaviour in the wake of the Bank of Japan easing. The weekly Japanese flow data regarding Japanese investors' net purchase of foreign assets that will be published on the 18th of April will probably get an unusual amount of attention this week. Meanwhile, the rhetoric regarding competitive currency devaluations has intensified ahead of this week's G20 meeting on the 18th and 19th of April in Washington. Last week, the US Treasury said in its semi-annual report to Congress that Japan must refrain from competitive devaluations and targeting its exchange rate for competitive purposes. However, while the topic is likely to get a lot of attention in the media this week, and while some investors might consider reducing their short yen exposure ahead of the meeting, we doubt that it would trigger a significant yen rally. We also doubt that the G20 stance has changed much from February, when the members pledged not to target exchange rates for competitive reasons. In the European session, the focus will be on the release of euro area trade data for February. Export growth is key for the euro area's ability to exit recession and may well turn out disappointingly downbeat. Import data will probably reflect that domestic demand remains very weak. And in the US session, focus will be on the release of regional PMIs for April, as is kicked off with the release of Empire Manufacturing PMI today. It will be interesting to see how the regional PMIs come out following last week's contraction in ISM and the weak employment report. The US housing market is also likely to be in focus this week as US housing market data is released, starting with the National Association of Home Builders Housing Market Index today. We expect that the data will confirm that the US housing market recovery is robust. For all the news affecting the Forex market throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.